Welcome to the Midwest Mogul Show, where we talk all things business, real estate, and entrepreneurship. Let's dive into today's episode and make business enjoyable again.
Welcome back to the Midwest Mogul Show. It is your host, Carter Crowley here, and we are doing a Friday deal breakdown. So for those of you who are interested in getting into real estate, you're wondering, how much money can I make? Is it a profitable business? Do I have to do a ton of legwork? Can I work from home? What are the nuances? We're going to break down how we just made $20,000 one day worth of actual physical labor work at the job site. And I'm going to break down all the different numbers, metrics, how we source the deal, so on and so forth for you guys to enjoy. So without further ado, I'm going to share my screen. So if you guys are just listening on the audio feed, maybe check this out on YouTube, Carter Crowley on YouTube. But let's break this down together. So I'm going to pull up my screen. In this particular property, it is in Milwaukee, Wisconsin. So with that being said, let's do this together. So as you can see right here, we've got 3930 North 70th Street, Milwaukee, Wisconsin. And for my viewers, I'm just going to pull up the actual Zillow listing the place so you guys know this is legit. You can see here, 3-bed, 1-bath, 1,015 square feet. It's like a Milwaukee Cape Cod style house built in the 1950s. Very basic place. Overall, actually a really, really nice property. You can see here, we just sold it at $165,000 on, let me give you the date. So listing sale date, 6/18/2026. It looks like they were actually renting it out for $1,875 per month. We probably should have kept it as a rental because that's what my initial thought pattern was, but I guess it is what it is. On that side of things, we ended up just reselling it. We needed some cash. We needed some guala, and now we don't have it anymore. So initial thought pattern was to keep this as a rental. We're trying to build out our rental portfolio down in the Milwaukee metro area. To each their own when it comes to that side of things. I like the Milwaukee market because rent prices are higher. We can acquire the places for a lot deeper discount than we can up here in the local Fox Valley area. So that is my assumptions going into it, but you can even see here. So they bought it for $165,000. Just doing a quick, the 1% rule for those of you guys that do not know. So 1% rule when it comes to rentals would be if they bought it for $165,000, can they rent it for $1,650 per month? Now it looks like they're renting it at $1,875 per month, which would ultimately put us to $1,875 divided by $165,000. That puts you at the 1.1, roughly 4% rule, which is better than most. And if we would have done it at our all-in cost, we would have probably been, if we had it for like $130,000 all in. I'll show you guys those numbers in just a second, but $1,875 divided by $135,000, we'll say, that would have put us at about 1.4%, which is a very heavy cash flowing property. And the place was super nice, which I'll show you photos here in just a second. But let's break this down from the beginning. So where did this particular property come from? For us, this was a Google PPC lead. We are very, very heavily invested into Google PPC on our side of things. We spend a significant amount of money on a daily, weekly, monthly basis, and it generates us a pretty decent return on investment. Now, it is a pay-to-play game. It is not cheap by any stretch of the imagination, but it is definitely worthwhile for us to do it because we're seeing an ROI, but we've also been doing it for 6 years. So our experience might not be the same as yours, but take it for what it is. I really like Google Ads, Google PPC. That's why we run it. But just to give you a synopsis, so these are photos when we initially purchased the place. This was my initial walkthrough. So as you're looking at my screen, if you guys are tuning in on YouTube, but if it's just audio, what we are specifically looking at right now is a 1.5 story. We're looking at the current upper level. It had brand new vinyl plank floors. This was a flipped house when the lady had initially purchased it about 5 years ago. So it was a flip house. So it had new vinyl plank, it had white trim, and it had gray walls, vinyl windows, new kitchen with granite counters, stainless appliances, tiled shower. It had everything. And that's why it was so appealing as a rental property. It just didn't have a garage. So ideally, we probably should have kept it as a rental, but it's hard to give up 20 grand in profit versus like $250 or $300 a month in rental income. But that would have been the smarter move. Hindsight's always 20/20. So we have this particular property here. So we're looking at walls upstairs in trim and flooring. We literally didn't touch a thing. We did not have to stick a single dollar into this upstairs area. All that we did once we start getting into the kitchen area, you can see here, there's a lot of clutter. There's grease everywhere. There was like walls were all dinged up. She had some large dogs. So the main floor, the scope of the remodel here was a very deep cleaning, and we painted the first level of the entire house. That is literally all we had to do. We did some junk removal. We painted the first level of the entire house. Initially, I was thinking we could sell this for $185,000, so it would have been a lot more profitable flip. We ended up selling it for $165,000. Just again, it didn't have a garage. No garages are really tough to sell here in Wisconsin, but it comes with the territory. Walls, foundation walls were all solid. Honestly, look at the bathroom. We literally just had this deep cleaned. It was a little disgusting, a little dirty. There was hair everywhere. There was freaking God knows what was all over the place, but yeah, we just had our cleaners go in. We painted again the main floor. And the thing that surprised me the most about this one, I'm kind of going off on a tangent. So vinyl plank floors are pretty darn resilient. The fucking dogs in this house, Rottweiler, seemed friendly. Well, actually, I'm in line. It did not seem friendly at all. I thought it was going to kill me through the cage. But this particular Rottweiler scratched so much of the vinyl plank floors that realistically that section should have been replaced because it was so beat up. Like they scratched into it so much because they either got aggravated or frustrated that it damaged it. They literally scratched through the vinyl. But as you can see here, as we're scrolling through the photos, everything else seemed really nice. Just needed some yard cleanup. Nothing too crazy there. And now as we're looking at my screen, here's the after photos. So you can see here, we trimmed up the bushes. We made everything look nice. Kitchen looks nice with fresh paint. Photographer did a fantastic job. Like kudos to them. I think we used James Meyer Photography in the Milwaukee area. But overall, like the walls were really nice. Bathroom cleaned up extremely well. There's not even a photo of that. Actually, you can see here in this corner, it's a little hard. It's a little blurry. That's where the freaking Rottweiler just went absolutely apeshit on the floors. And then here, there used to be a garage. We would have probably gotten that 185 if it was still standing, but it got knocked down at some point just due to the situation there. It was probably falling apart. So that is the completed photos. And let's dive into the numbers. So we're in our QuickBooks right now. Hopefully no confidential information is being shared. I doubt it. But you can see on our side of things, let's break these numbers down together. So we bought this property $124,287. As you could tell from the initial walkthrough photos, it didn't need a whole lot of work. It was pretty maintenance free. It was honestly not too bad of a place. So with that being said, we just planned on doing a little bit lighter rehab. Again, I was just planning clean out, paint, relist the place, or we were initially planning on keeping it as a rental, and we didn't end up doing that. So that was the initial stages. But let's get this back in here. Okay, so we had rehab costs, $3,127. That includes lawn care, trimming up the whole yard. It was a little bit overgrown. That includes all the paint. We had to have the ductwork cleaned out. And I believe we needed a plumber to go over there twice because the plumbing going into the basement was a little bit clogged up from grease in the pipes. So we had Roto-Rooter service it twice. That was our painting. That was a labor for painting, so on and so forth. So we stuck less than $4,000 into this place. You can see here, holding costs, we had about $2,400, taxes, insurance, utilities, so on and so forth. Selling costs, this is real estate commissions, title fees, we had about $8,000, and property tax prorations, and then insurance cost. That's like, we'll ignore that. So our total income, $165,000 in the place, that's what we sold it for, minus all of our costs into it, $144,883, leaves us with a net profit, $20,100. $116 for literally 1 day worth of work. Now, some of you might be watching this or listening to this. You might be like, Carter, that is absolutely crazy. There is no way I would do a flip project, and only make 20 grand. It's way too high risk. And truth be told, it could be perceived as high risk, but in my mind, I'm like, first off, this would have cash flowed like crazy. Even with bank financing, bank debt on it, commercial loan at 6.5 or 6.75%, it would throw off probably $300 to $350 a month in cash flow. For essentially, we would have been able to refinance, pull all of our funds out of it. So with that being said, yeah, we only made $20,000 on a flip. And when I say we only made $20,000 is a shit ton of money. So there's nothing wrong with that whatsoever. Versus we could have made $350 a month, or we'll say $300 a month on a rental. So if it was $300 a month, I'll do some quick math here. So $300, that's $3,600 a year for literally no money out of pocket. So it would have been an infinite return. Again, a very maintenance-free place. Would it have been better to keep it as a rental? Maybe, maybe not. But the truth be told, in any sort of business, you need constant cash flow coming in, especially when you're very heavy into marketing like we are, when you're very heavy into renovation projects like we are. We need constant income coming in. We had acquired a lot of rentals in the beginning portion of the year. So this one, although it checked all the boxes, it was a very, very nice property. In the long run, it just didn't make financial sense to keep it for us at that point in time. And in the same kind of nuance, we were buying a 12-unit apartment complex that was going to cost a little bit more money out of pocket. So we just didn't want to limit ourselves or run out of free cash flow when it came to things. So we took a quick $20,000 win on this particular deal. We got the financing through Kiavi. They borrowed us 100% of the purchase price. We are on their pro program just because of all the deals that we do on a yearly basis. So I think it was, we borrowed at 11% 1 point, and they did 100% financing for us. So again, for less than $10,000 out of pocket, we were able to double our money, $20,000 in total profit. And that's net after all expenses. So overall, not a bad deal. And for those of you that are wondering, it's like, hey, Carter, can I do this in my own business, my own life, so on and so forth? So this lady was actually, she was behind on payments, pre-foreclosure, and would have been probably on any list that someone would have reached out to. Now, she decided to reach out to us. We were competing against multiple other investors, but you have to build rapport when you are on the job site or when you're on the appointment. If you do not build rapport, honestly, you're not going to get the deal. Like, you could be the biggest prick, for lack of a better term, and provide the highest price. They might not go with you just because they don't trust you or you rub them the wrong way. You don't need to tell them everything that's wrong with their place. You don't need to be insulting. You just need to honestly build a relationship, be friendly, be courteous, understand, have empathy from where they're coming from. And ultimately that'll help you win more deals in the long run. So hopefully you guys enjoyed this breakdown when it comes to like the Friday daily breakdowns. I enjoy making videos like this. You can see real life examples of properties in your area, especially if you're here in Wisconsin, to show you that the proof is there. Like this one, most people would not have bought this house for, let's see, $124,300. Well, I'm not even sharing my screen. Just give me a second. So most people would not have bought this house for $124,300. We did. We still made, the traditional numbers would have said, okay, ARV 185 times 0.7, that puts you at 129.5, and then minus rehab costs. Some might have overestimated rehab costs. Say they said it's going to cost me 10 grand in a rehab. That would have put you at 119. So depending upon how you run your numbers, obviously make it worthwhile for yourself and kind of go from there. So we ended up, like I said, when we sold it for 165, it was to a investor. We could have probably waited longer, but again, there's holding costs that come into it. All these different things that some people may or may not factor in. So if you guys have questions, please feel free to reach out, Carter@flipfoxvalley.com. Otherwise, stay tuned. We are posting at least 2 podcast episodes per week now. This is the form of content we're using moving forward. So I will dive into our business in extreme detail. And if you have questions, I would love to connect with you. So peace. I will see you guys next time.